Okay. And so the question is reading, Omar is a trader. He provided the following information for the year ended 30 April 2021. Okay. So we are given this information of the sole trader. We're given the information of the sole trader. Okay. And the information that we have been given of the credit sales. Yes, the credit sales. So given the credit sales, the credit purchases, the gross profit, the commission receivable, and the expenses. I'd ask it to calculate the following ratios. To start with, we are required of calculating the trade receivables turnover. We need to calculate the trade receivables turnover. How can you calculate the trade receivables turnover? What's the formula, first of all, to calculate the trade receivables turnover? Okay. Trade receivables. How do we calculate the trade receivables? So the trade receivables days, we are going to choose the days. The trade receivables days equal to the trade receivables divided by what? What are we dividing it with? What's the denominator? Okay, so trade receivables over the sales, okay? The credit sales, the trade receivables divided by the credit sales, then multiplied by 365, and that will give us the same. So if you write the correct formula, you get 1 mark. 1 mark for writing the correct what? The correct formula. Okay. So we just now substitute into the formula. So what we are doing is just to substitute into the formula. Okay. So when we are substituting into the formula, we get the value of the trade receivables that we have in the question. And so the value of the trade receivables that we have been given is equal to what? 124,400. So just get the value of the trade receivables, 124,000 divided by the credit sales, and the value of the credit sales is equal to what? To 191,000. Okay, 191,000 multiplied by 300 and what? And 65. When you do your computations, you should be able to get the days that can be rounded off to 24, to the 24 days. Is that clear? So the 24 days for Omar, and that is for the trade receivables. We are also asked to find the trade payables, to calculate the trade payables or the trade payables days. Okay, so for the trade payables days, equal to, trade payables divided by the credit purchases. Okay, trade payables over the trade the credit purchases. So the trade payables that we have are equal to 7,000, the trade payables over the credit purchases, that is out of 120,000 multiplied by 365 days. When you do your computation, what you should be able to find are the 22 days. Does that help?
Yes, sir.
Okay, thank you. So if that helps, then we can go ahead. We can just go ahead and look at the next question. Okay, very, very important to understand. The next question says, the year ended 30 April 2021 was Omar's first year of trading. Okay, so the competitor Ahu okay, has been trading for many years, and then the competitor who has been trading for many years has got the following what? Has got the following ratios. The trade turnover is given like that as 36 days, whereas for OMA we said the trade receivables days at 24, and then we found the trade payables days for OMA to be 22. So now we are asked the following question. And so the question is, can you suggest the two reasons for the difference in the trade receivables turnover of the two companies? The following were the possible answers. Okay, the following were the possible answers. Number one, you can say that number one, this competitor of OMA allows the trade receivables a longer credit period. That is 1 mark. If you say that, then you would get 1 mark. Number two, you're told that AO has an inefficient credit control system. The person who has an inefficient control system is AO, because it takes many days for people to pay back their debt. You get? The trade receivables does measure the number of days it takes for our debtors to pay back the money that they owe us. So it takes a lot of days for these debtors to pay the money. Okay. Then we can go to the other one. It offers, AO offers no cash discount, okay? Or it offers lower rate of cash discount for prompt payment. If it does that, it could be the reason as to why they are what? It could be the reason as to why people are delaying to pay back the money. So obviously they don't offer cash discount, or the discounting rate, the interest rate for the discounts is really low, very, very low. Yeah, those are some of the possible reasons. Or you can say that AO does not make use of invoice discounting and factoring. Those could be some of the reasons as to why they had those longer days as compared to the other friends. If you speak about it from OMA's point of view, you can say that OMA allows trade receivables a shorter credit period. Or you can still say that it has a more efficient credit system, because we saw this by having the few days. OMA had few days, only 22 days for payables turnover and 24 days for trade receivables. Okay, so we can say that it has a more efficient credit control system. We can still say that OMA offers cash discount, or a higher rate of cash discount. That's why people are able to pay back the money quickly. And finally, we can say that OMA makes use of invoice discounting and factoring, okay? Makes use of invoice discounting and factoring. All right. Yeah. Then we can go to the question number B that says, can you suggest now the reasons as to why? Okay. Are there any reasons as to why? Any reasons as to why we have the difference in the trade payables turnover of the two companies? The possible reasons as to why could include the following. Okay. It could include the following. We can start looking at it from AO's point of view, and then you can look at it again from the other point of view, which is the, OMA's point of view. From AO's point of view, you can say that AO is allowed, a longer credit period by trade payables. That could be the reason as to why she takes time, to pay back. Maybe is allowed a longer credit period by the trade payables. The other reason it could be that the suppliers, they offer no cash discount for this person so that they can pay early, okay, or for quick payment. And because of those reasons, they can be, you could see this difference in the trade payables. Looking at it from the OMA's point of view, you can say that OMA is allowed a shorter, credit period by the trade payables, like what do you call these? The suppliers, the creditors allowed a short period for this one for OMA to pay. And we can still say that the suppliers, they offer cash discount for, for quick payment or for prompt payment, among others. And the credit customers pay more quickly for that. So those could lead to the differences in the payables and what? The payables and receivables. Okay. There was this question, okay? There was this question that this now OMA wants to increase the sale and is considering employing a manager who is a marketing manager, of course, who would be paid $28,000 per annum, in dollars, of course. Your duty is to advise OMA. Remember, for OMA, you remember the ratios that we calculated for OMA, that he had the shorter receivables days and the shorter payables days. Now you are asked that can you advise the person whether or not he should employ a marketing manager? You justify your answer. You may include some reference to the possible effect on the income and expenses of the business. Right. You are just there to advise, should the person get the marketing manager or not. Some of the advantages that can be there if the person accepted to get the marketing manager would be, they may increase the sales and that may later on increase the profits. Okay, so that is that. Then they may improve business reputation, image, and they can still utilize the experience and the skills of manager. They may increase market share. So those are some of the things that usually happen generally. Then about the disadvantages, we can say that if you employ the marketing manager, then the manager's salary will increase expenses. Okay, it will increase expenses if you increase if you employ managers. The increased cost of marketing or marketing expenses can still be a disadvantage for that. So those are some of them. So if you gave any of the 2 points and gave a recommendation there of at the end of it, or that would make you get 5 marks. So the total marks that were allocated for the question were 5. Now, the last question, the second last question, is asking us to state the 3 ways by which this OMA could reduce the possibility of irrecoverable debt, the bad debts. How can you reduce the bad debts? Number 1, you can establish a credit limit for each customer so that the bad debt by the irrecoverable debt. Yes, sir.
Sir, I have ICT tuitions at the moment online, so can I be excused?
Not a problem, sir.
Okay. And you can end the meeting because there's no one else.
Oh, okay, not a problem.
Okay. Thank you.
All right, we'll talk. We have to talk in the inbox. All right, can you state the 3 ways? So that is what could lead to that same one? Okay, you can establish a credit limit for each customer. After that one, you can issue invoices and statements promptly. Then you can improve the credit control, you can maintain the good credit control system. Those are some of the reasons or the possible ways on how you can ensure that you reduce the possibility of having a recoverable debt. Okay, so we can, in the meantime, end here. Wish you well.